Hello everyone and welcome back to my new video. You are watching The Wealthy Brains and now let's get in this video. As always, there are people predicting Bitcoin's imminent doom as well as Bitcoin's imminent ascendency to being a major player in global finance. Beyond the hype of doom or moon, though, there are concrete reasons to expect Bitcoin's price to boom once again in the upcoming years. Here are the top 5 reasons for Bitcoin's next price explosion. The 2020 economic crisis plus money printing. Plenty of people had previously said that Bitcoin had only done well in its first decade because most of the world was in a decade-long economic expansion, and that as soon as a recession hit, Bitcoin would be doomed. Bitcoin, like pretty much every global asset or market, crashed hard on the panic sell in March related to the pandemic and the quarantines shutting down of economies. But that is to be expected, since it was an all-market crash. What we have seen since that mid-March crash is that Bitcoin performs very well in an economic crisis. Bitcoin is having a fantastic year despite crashing hard in March. But more importantly, for Bitcoin's long-term price appreciation and the mid-term explosion that is coming, is that money printing machines of central banks have been turned on high this year. Not only does this mean more inflation in fiat currencies in the future, but also more money floating out in the world that can find its way into good investments. And undoubtedly, some of that money has and will continue to find its way into Bitcoin. So, massive money printing is a double boon to Bitcoin's price and will affect the price in the current market cycle. The May 2020 Bitcoin halving and normal market cycle dynamics. So far in Bitcoin's still young life, its 3 halving events, occurring roughly every 4 years, have been suspected to be the major catalysts behind Bitcoin's major full markets. New Bitcoin gets minted roughly every 10 minutes, and each halving cuts that amount in half. Bitcoin's mining reward halved from 50 BTC to 25 BTC in 2012. And in 2013, the price exploded by 2 orders of magnitude from about $13 to about $100. Bitcoin's mining reward halved from 50 BTC to 25 BTC in 2012, and in 2013, the price exploded by 2 orders of magnitude from about $13 to about $1,150 in December of that year. The reason is just simple: supply and demand. With an ever-increasing demand on Bitcoin over the long term, these built-in supply-reducing halving events lead to a forced price appreciation, which then builds into market hype and FOMO that result in a huge bull run. Simple supply and demand. It isn't hard to predict the broad strokes of Bitcoin's market cycles. It is an emerging market asset with incredible potential and functionality. With a built-in and automated monetary design that favors price appreciation, this leads to extremely volatile market cycles that involve huge buying frenzies, leading to immense price appreciation followed by sharp crashes and extremely deep bear markets. But with the overall trend being massively upwards with each new market cycle. The most recent boom and crash was 2017-2018, so historically it has been expected that 2019 and 2020 would be a gradual build-up back toward the heights of the last market cycle's peak, which then would lead to the next parabolic move upwards in 2021, and perhaps 2022 as well. Companies switching to BTC as their reserve currency. Just a week ago, we got the first news of a company using Bitcoin as their reserve treasury currency instead of US dollars. MicroStrategy, a company you probably haven't heard of, but has, as of right now, a $1.4 billion market cap, signaled that they had just moved $250 million into Bitcoin and would now be using it as their principal holding in its treasury reserve strategy. This is big news. Companies hold a lot of money in cash as reserves. MicroStrategy isn't even a huge company by global standards, and yet it just bought 21,454 BTC for $250 million. With the expected inflation increases from mass money printing as discussed above, and just this month, the US Fed announcing that they will no longer target 2% inflation and will allow inflation in the future to drift higher, it makes sense for companies to put some of their long-term reserves into Bitcoin as a hedge to balance against the inflation that their cash reserves will incur. If this is the start of companies moving even just a few percent of their cash reserves into Bitcoin in order to protect the value of their money, this alone could lead to mass price appreciation. I'm talking an order of magnitude from this factor alone in the years to come. With the money printing that has been happening this year and the Fed's new loser strategy on inflation, it is very possible we will see the beginning of this shift, during which billions of dollars could flow into Bitcoin in just the next year or two if a small number of companies move to protect their money from inflation. Decentralized finance. DeFi has become the next big thing in crypto. As ICOs were to 2017, DeFi seems to be to 2020 and likely beyond. Though DeFi looks likely to be much less shady, scammy, full of hot air and ephemeral as ICOs, Forbes describes DeFi as the notion that crypto entrepreneurs can recreate traditional financial instruments in a decentralized architecture outside of companies and government's control. DeFi is a market that has been steadily gaining steam for a couple years and is just starting to really come into its own now. Ethereum is the main blockchain on which DeFi occurs, and DeFi-related tokens on the Ethereum blockchain are booming as of late. This is great for Bitcoin, and not just because it expands the overall crypto market, which inevitably leads to Bitcoin, as ICOs did in 2017, but because there are now products that can tie Bitcoin to Ethereum to use it for DeFi. Without going too much into detail, Bitcoin can basically be used as the principal for DeFi smart contracts on Ethereum by allowing people to tie up their Bitcoin in exchange for Ethereum. The most popular crypto token for doing this currently is called Wrapped Bitcoin. And even though it has only been around for a few months, it has gained a lot of popularity in DeFi and currently boasts a supply of over 28,000 Bitcoin. It is natural that BTC should become a major player in DeFi now that bridges exist between BTC and ETH to allow this. BTC has by far the most liquidity of anything in the crypto market, making up over 50% of the entire cryptocurrency market. DeFi will flourish with Bitcoin's added liquidity, and in return, DeFi will tie up a lot of Bitcoin's active market supply, leading to price appreciation. DeFi seems to be the main mover in the crypto market outside of Bitcoin itself right now, and it looks like a concept that will stick around. So don't be surprised if a year from now there are hundreds of thousands of BTC taken off the market and tied up in decentralized finance. Now we can conclude why Bitcoin is likely to greatly appreciate in value from now through 2021 to 2022. An order of magnitude higher price isn't out of the question in the next couple of years given these price booming influences. This is all for today, folks. If you enjoyed the video, then leave a like, and if you are new, then do not forget to subscribe. Stay tuned for the future updates and see you till the next video.